All right, Tesla, man. I did the last time I did podcast on Tesla, November 9th. I had this in an early stage 2. Time moves on, and it's not in the stage 2 anymore. All right, let's look. Always reduce noise with monthly defined resistance, breakout lines, monthly defined support, defines your range. Here it is. And that is one noisy chart. All these wicks, those are whipsaws. You got another level here, more tested more recently. Crazy volatility during the month. So unless like you're a fast scalper or day trader, swing trade, this will give you fits. Position trade, this will give you fits. Unless you catch off a base that's breaking out, that brings you high. This one right here, hogging around the 12-month moving average, is not a place you want to be. Not an A++ setup. You've seen most of the setups that we that I've spotted. It's these huge bases, stuff, something like this right here. Nice tight base. And after that, when you explode, you ride it. Stage 2, up. Monthly candle chart. So you would have been holding Tesla all the way from 37 all the way until you had a close right here around 220. That's what you want to see. That's the type of play you want to be. But right now, once the damage is done, once I see closes below 12-month moving average, I have a hard time. Then you have to really look at the weight of evidence. Are we out of that resistance, that overhead resistance? All these buyers that are going to want to break even, they're going to want to sell when the price action's there. All that huge congestion area. Very dangerous. It's just going to make you stay in the stock longer. Base, don't waste your time. Wait for that base to explode out. Once it's out, then you're right. That's what you're looking for. There's no overhead damage. You haven't been going up and down below a 12-month moving average. Like here, another go down. Oh, it's up above. Even here on the weekly, probably looks like a stage 2 on the weekly if we zoom in there. But that monthly defined breakout line really bring you back in. No, failed. Tried here, didn't quite make it, and then the next one after that, then off it went. So you got to really respect that 12-month moving average. And right now, even the closest one right here is not. We're still far away. We're below 12-month moving average. And here is my monthly defined breakdown. Here's a close one right here. Okay, so let's zoom in on the weekly. What is the weekly chart telling me? That is so messy. Wow. So these are clues when you're stage 3. You're thinning Ichimoku cloud. So that means the overhead resistance or the underneath support has been thinning because you've been moving in a sideways pattern. You're hogging that 30-week moving average. This could go in any direction right now. Starting to underperform the SPX. What other signs I got? I got some volume here. Presently, this is in a stage 3, starting to be in the early stage 4. But until we have a price action close below these monthly defined breakdown lines, very delicate to play Tesla. Could bounce back up here and then maybe here, or I would definitely wait for this to close below and play on the bounce of that super duper important support that would now turn resistance. Lower highs, starting to really create some lower highs right here. So entry point right here, somebody could have taken an embryonic position, expecting a bounce of that monthly defined support. Right here, if this support now turn resistance, another small entry here. and then after that, hit that support, hopefully break through, and then after that, the bounce back up. That was support and resistance. But still very, very early. We did, yeah. Let's check out, I want to look at that volume right here. You see that wick? We got some good red volume, but it's not a full Marubozu candle wick. And I want to see if that damage, it was done on it was done down. So it was a gap down during the week. No, the week, where did it start? Where's my candle? Hold on, let's go back. I'm gonna put in my vertical line right here. Daily. So where did the week start? The 25th. Okay, right here. This week started low volume, green, low volume, green, really going up but low volume. 28th, gap down, low volume, price action went down. And on Friday, that's when there was a huge dump, and here's a huge red volume. So zooming in on daily gives you the health of that weekly volume. And right now you see that the small analysis is telling me that it was relatively negative, relatively bearish, that candle, that weekly candle, based on how it was cut up, how those 5 days of the week were cut up. And you see today, this week started off with a continuation down with heavy volume already. Always good. The daily gives them advantages. Yes, you get more whipsaws. I rather wait for the monthly chart for anything, for my ultimate higher trend signal to get in. But those smaller time frames, that will give you health. Will give you some indication of what's happening. So right here, if I move that, see that wick. Then after that, you want to know where that volume happened. It happened when the price action was pushed up, and did it go down on light volume or the inverse? But now we saw that it went up on light volume, and most of that heavy red volume was on that push down, those sellers getting in. So not looking too good for Tesla right now. 1 day in, and how much is going to go? 1, 2. Oh, let's see if the red could increase like that. Deconstructing, pretty nice right now, but you got to be careful. If you take positions, make sure your sell stops are close by, small position size, and expect those bounces off this important support right here. And if you really want to be safe, wait for it to break down below that monthly defined support. Then you could play on the pullback to that on that support and resistance. And here is my, wow, look at the mess, Pat. Look at the mess. I want to remove that. Remove all. Here is my monthly defined breakdown. Whoop. That's the greedy target. When I say greedy, I take the furthest away and have a crazy swing rule, and that would bring me all the way back down to 140. There's some natural support right here. You could expect to bounce there. And this line, if I stretch it, here there's more. Here's my breakout. Yeah, I was up here. Not quite sure about that one. So if we close below that 12-month, that monthly chart breakdown, measure move all the way down here, could expect if it bounces down, hit that monthly defined support, bounce up, hit that support, turn resistance, then the 12-month average will be going downwards. And that's how I could imagine this this thing working out, panning out. So you saw on the weekly embryonic entry. But if you really, really want to be safe, close below monthly defined support and enter on that pullback, maybe all the way here in the future. So I stretch this out. I don't know how many candles we need to get back here, but this will be probably the best risk to reward entry. And on the weekly, oh, my squiggly lines. On the weekly, pretty much the same thing how I just drew him before, guys. So yeah, Tesla, man, you're a headache to analyze. In case in doubt, choose some better A++ setups. If this was really a hard analysis to try to deconstruct how this thing could go down, always rely on the higher trends signals, and you can't go wrong. You'll minimize those whipsaws when in case in doubt, because this is a lot of volatility. And if you want to play those volatile small time frames, you better go on the monthly and reduce as maximum noise as you can. All right, guys. Thanks for watching. Ciao.